The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magic Bricks webinar, our endeavor to empower you with the insights on the Indian real estate market performance and consumer sentiments on property prices in the next 6 months. The topic of today's session is Delhi NCR, Kolkata demand 2 BHK units, Gurgaon opts for 3 BHKs. And our guest speaker today is E. Jayashree Kuru. She is the head content and research with Magic Bricks. Jayashree is involved with a number of global research initiatives and specializes in analyzing research data to provide usable solution to users. She also works with business in using industry dialogues with senior management in her domains of expertise to generate content solutions that keep audience and industry engaged. She has been a business journalist for over 2 decades with the Times of India, the Economic Times, and the Financial Express. She writes extensively on real estate and infrastructure, city management, information technology, HR, and management. So, without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. Welcome to the Magic Bricks webinar. As you know, the Prop Index is a quarterly publication that Magic Bricks comes out with, where we track listed apartment prices and the demand, and try and bring to you an index which helps you understand how the markets are performing. This time, we are focusing on the North and East region. The Prop Index can be used as a tool which provides detailed information on price movement, supply, and user demand for multi-story apartments and single floors listed across cities. We have a national property index trend, a city property index trend. There's a listed price monitor, a rent monitor, a yield meter, top preferred localities, demand and supply analytics, and the locality price range and realty news. Let me go to the Prop Index immediately. According to the Prop Index, Noida and Ghaziabad city index rose by 1%. Kolkata remained unchanged, while Gurgaon and Delhi witnessed a drop of 1% and 3%. Remember that the Prop Index is a factor of the number of listings aggregated to the price, and this is done at the locality level, then indexed to the city level and the national level. Over 80% of demand was recorded for apartments across North and East region, except in Delhi and Gurgaon. The demand for 2 BHK continued to outstrip supply across the North and East regions. Delhi recorded a maximum deficit of 21%, followed by Noida and Gurgaon at 13 to 14%. Kolkata recorded the maximum yield across the North and the East at 2.8 to 4.8%. This is a high yield. In Delhi, the city index dropped by 3% and the listed price monitor remained unchanged. This is probably because of the land pooling policy. A lot of the city is waiting for the land pooling policy to play out. They want to know what's happening in that part of the city, and therefore the rest of the city's market has slowed down. Also, Delhi is in an oversupply mode for premium properties, whereas a lot of the demand is for properties which are in a slightly more affordable range of 60 lakh to about 1 crore. The slow real estate activity has led to a drop in capital values in over 50% of the localities. That's a telling statement on the state of the real estate in the city. Horskhas, Saket, Greater Kailash 2, Khalkhaji, and Safdarjung Enclave recorded the maximum drop. A few quarters ago, these were the same areas that were driving the property market. Uttamnagar, Dwarka, and Vasant Kunj continue to be the top 3 preferred residential localities for sale.
I'm really sorry to interrupt, Jayashree. I think there's some technical glitch at your end. Can you please re-log into the session?
Okay.
All right.
लगी लगाऊं? नहीं चल सकता अभी तुम उसमें प्रॉब्लम होगी ना इनसे
We are really sorry for the technical glitch. Please be online. We will start the session soon.
Round 5.
Please be patient. We would be back online very soon. Hello, Jayashree. Welcome back. Would you like to continue the session from where we have left off?
Thank you, Aradhana. Sorry for the technical glitch, users. We were talking about the Delhi market. An oversupply of 24% was recorded for properties worth rupees 2 crore and above, and South Delhi recorded the maximum drop of 14% in demand for properties priced above rupees 2 crore. Ayanagar, Chhatarpur, Mehrauli, Badarpur and Ghitorni offered the maximum options in the up to rupees 20 lakh range. It's a mixed reaction from the market, and one cannot really assess what's happening in the Delhi market. However, there is a huge demand and a reasonable amount of supply in the smaller units of up to 20 lakh. These are mostly in peripheral areas or areas which are resettlement or redevelopment colonies, and that is why this process is happening. In Gurgaon, the city index dropped by 1%. A very high property value ensured that the listed price monitor remained unchanged. The consumer interest is a little lower than before. There has been no significant rise in the capital values across the city. Sector 69 noted the highest rise of 2%, and Sector 47 witnessed the maximum drop in value of 4%. Sona Road, Golf Course Road and Palam Vihar continue to be the preferred areas for residential properties. Properties below 1 crore witnessed a rise in demand across budget ranges. Properties worth 1 crore and above posted the highest demand of 62%, marginally lower than the previous quarter. Gurgaon actually bucks the trend because the demand is for higher value properties and larger format properties of 3 BHK. Sona, Bhunsi, New Palam Vihar and Ashok Vihar offered maximum options in the up to 40 lakh category. The Sona Bhunsi region is where the greater Gurgaon development is happening. The affordable housing sectors are also in this region. Noida, the city index rose by 1% and the listed price monitor witnessed no change in the last 6 months. The capital values largely saw a range-bound movement of -2 to +3%. Values in sectors 45, 78, 93A and 93B noted the maximum rise of 3%, while it rose by 2% in sectors 100 and 137. Over 50% localities witnessed a rise in rental values. Sectors 29, 51 and 61 noted the maximum rise. Apartments are the preferred residential option with 82% demand. Properties worth rupees 60 lakh recorded a 2 to 7% in demand. Remember that in the Noida market, there is a very large existing Noida market which has plotted developments and residential houses. However, the demand has all shifted to the new developing sectors along the expressway where new projects are coming up, new format properties are coming up, and gated communities, apartments within gated communities are coming up, and demand has shifted to those areas. Properties worth above 60 lakh witnessed a drop in demand by 7 to 8%. Clearly, end users are in the market, and end users are mostly people working in and around Noida who would like to stay closer to the workplace. Demand for 1 and 2 BHK units continue to outstrip supply. There is a lot of demand, but supply for 1 and 2 BHK units has started dropping. In Ghaziabad, the city index rose by 1% and the listed price monitor by 3%. Ghaziabad is an affordable market and the demand continues to grow. End users are driving this market. Most of the localities witnessed a rise in capital values. DLF extension and Ramprastha noted the maximum rise of 8 to 9%. Indirapuram, Vaishali, Crossings Republic and Rajnagar extension continue to be the most preferred residential destinations, all extremely affordable destinations and where there have been infrastructure inputs. The 40 to 70 lakh category continue to be the most preferred across Ghaziabad with 43%. Supply is short here. Demand exceeds supply. Indirapuram, Vaishali and Vasundhara offer options in the 40 to 70 lakh categories. Ramkua, Ankur Vihar and GT Road offer maximum options in the affordable ranges. In Kolkata, the city index remained unchanged and listed price monitor rose by 1%. The rise in capital values in more than 55% localities in the city kept the market upbeat. When the rise in capital values are spread across a city, that it bodes well for the real estate of the city. It is not one location where the prices are going up. It really means that capital values are rising in more than almost across the city, more than half of the city. Rajarhat, Garia and Newtown remains the most preferred areas in the city. The city requires investment in the industrial sector to boost the job market, which will in turn provide an impetus to the real estate. This is an input that has come in from real estate industry in the city. Maximum demand of 46% and supply of 36% was noted for properties in the 20 to 40 lakh range. There is more demand than supply, a 10% shortfall in supply. Joka and Barasat in West Kolkata offer maximum options of properties worth up to rupees 20 lakh. Kolkata is a city which is not very high in prices, and the fact that there are a lot of options in the up to 20 lakh category means that it actually caters to all categories of buyers. Garia and Behala noted maximum supply of properties worth rupees 20 to 60 lakh, while Newtown offers properties in the range of rupees 40 lakh to 1 crore. How does the Prop Index help you? It helps the industry and the consumer. For the industry, it actually helps you understand buyer preferences of property type, size, configuration, budget, and locality. For government offices and ministries of urban development, it helps assess the demand and supply gap and how to frame real estate policy using statistics. Construction organizations can forecast demand and supply in the region and at the locality level. Consumers can use this information to endorse their home buying decisions. You can understand your localities and cities better. Real estate trends and analysis gives us insight into the real estate price movements at the locality level, quarter on quarter. It also helps you assess the return on your investment, the capital and yield gainers in the city. Prop Index is computed based on listings of apartments and their capital and rental values on the website. Individual properties are aggregated into localities, weighted to cities, and then to the national index. The weighting is based on the supply of properties within the locality or the city. Magic Bricks has over 700,000 active properties hosted by more than 140,000 active users in 300 cities and 10,000 localities. That is a very large base on which we start our analysis, and therefore the chances of it being very close to the city, what's happening in the city, are very high. Today we have 12 cities, 620 localities. Delhi, Mumbai, Chennai, Kolkata and Bangalore are the large cities. The tier 1 cities are Pune, Hyderabad, Ahmedabad, Coimbatore, Noida, Gurgaon and Ghaziabad in the Prop Index. Capital and rental values trends are assessed quarterly. The yield on investment is assessed. Extensive user demand analytics helps you understand what other buyers are doing in the city. There's a demand versus supply statistics which helps you assess whether there's more supply or more demand, and you can adjust your expectations of the market accordingly. The top 10 preferred localities city-wise are showcased. Home in your budget section helps you start with a budget and then figure out which are the localities where you can get these properties. It also helps you understand what others are doing, others like you are looking for in the market. Real estate news snippets actually puts the entire city's real estate in perspective, what has happened in the city and the implications on the real estate during the quarter. This time we have a special feature in Prop Index. Times Property, the Times of India's property edition, has editors from in every city. The Times property editors have their ear to the ground and are assessing weekly the real estate trends in the city. They have given their perspective on the real estate market in different cities. Thank you. Over to you, Aradhana.
Thank you, Jayashree, for this insightful presentation and sharing with us. I would request Uma to take over now.
Hello everybody, this is Uma Sitaraman. I am the lead researcher at Indian Institute of Management, Bangalore. We have partnered with Magic Bricks and put out this housing sentiment index that is a quarterly monitor of the sentiment of consumers. So people who are in the market actively looking to buy property, what is it that they think? What do they think the real estate market is going to look like? That is something that we try to capture, and we've been doing this for the past 6 quarters. We also put out a seller index to gauge what sellers think too, and kind of compare what sellers and buyers are thinking at the same time. So the survey goes out at the same time at the end of every quarter. The methodology is based on the diffusion index methodology, which is very widely used to gauge sentiment and gauge economic parameters across the world. The housing sentiment index ranges from 0 to 200. So when we say 0, it means that people surveyed think property prices are going to go down. 200 means every one surveyed thinks property prices are going to go up, and median range being 100, which is neutral. An equal number of people think property prices are going to go up or down. So there are 2 key things that you should be looking at when you're looking at this number. So one is the absolute level of the index. So what is the actual index, either for a specific city or for the nation as a whole? And also, what have the changes been in the index quarter to quarter and by city? So this will kind of give you a gauge of the sentiment of people residing within the city. Currently, we cover 10 major cities. We started off with 8 cities, and now we cover 10 major cities across India, and also work on micro markets in each of these cities. Moving on to the next page. Just like a highlight of the Q2 sentiment. So aggregate buyer sentiment came in at 114 this time, which is slightly below the 118 that was recorded last quarter. Similarly, index also recorded a small downward sentiment, 159 instead of 161. This is also the first time that all 10 cities posted an HSI of above 100. But again, at the same time, this doesn't mean that all cities posted a positive sentiment. So when you compare it to the last quarter, most of the cities surveyed, except for 2, actually recorded sentiment actually fell in 8 out of 10 cities. Again, we should keep in mind that this is the first survey post-election results. So last time there was a lot of euphoria because the majority government had just been elected in. Whereas this time there's a lot of settling in, and people are kind of trying to gauge what's going to happen to the economy. So you do see the effects of that in the sentiment. Coming to the northern region specifically, sentiment in Delhi fell by 5% this quarter to 113. There was an announcement that circle rates will be increased in Delhi by up to 20%, and this acted as a dampener to sentiment. Noida witnessed a 10% drop in sentiment. Again, there's been a lot of news, and some of it pretty negative in Noida in terms of court verdicts with respect to the Supertech case. And Delhi's land pooling policy is kind of weighing down on Noida, because it means that there's going to be a lot more land available in Delhi, and that will kind of work as a negative to Noida's market. But again, there's a lot of positives also in terms of a lot of infrastructure development happening in Noida, and the government's push towards relaxing FDI norms and implementation of rates. So all of this should buoy up the Noida sentiments in the coming quarters. Gurgaon also witnessed an 11% drop in sentiment. With respect to Gurgaon, property valuations have increased a lot in the past year. So it makes Gurgaon one of the most costliest cities, and a lot of people looking at properties worth over 1 crore. So there is a chance that the same increase may not be seen in the near future. And again, this makes property unaffordable for a lot of people, and this could be some of the reasons why we see some negative sentiment here. Kolkata witnessed a very marginal drop of 5%. So as Jayashree mentioned, Kolkata has remained pretty flat in terms of sentiment, but again posting a positive sentiment of 126. Moving on to the analytics. So what we do with the survey results is run a lot of interesting analytics, and just to share with you analytics at the national level, 50% of respondents are looking for property below rupees 40 lakhs. So this again means that there needs to be a lot of push. The new government has been doing a lot, but we need a lot of impetus towards affordable housing, since we have such a large population looking at property below rupees 40 lakhs. And again, 19% of those are looking for property below 20 lakhs. Now, HSI for properties above rupees 1 crore decreased by 4%, again a marginal drop, but there were only 7% of respondents looking for property above 1 crore. And the very high-end properties, the ones above rupees 5 crores, HSI dipped sharply by 15% this time, but this comprises a very small percentage, just 1% of the total respondents. In Gurgaon, 25% are looking for property above rupees 1 crore. Now, this is the highest among all cities, which as I again mentioned earlier, which kind of dampens sentiments in the sense that the market is very expensive in Gurgaon. In Kolkata, 35% of respondents are looking for property below rupees 20 lakhs. That's a very high percentage. Kolkata is the highest that's looking for property below the 20 lakh range. And in Chennai, 22% are looking for property below 20 lakhs. And 45% of those who want to buy property above 1 crore want to buy within the next 6 months. While 39% of those looking to buy within 30 lakhs want to buy within the next. If you look at the metrics for those within 6 months, there's been a slight uptick in the sense that last time they wanted to wait 8 months, and this time people want to wait around 9 months to make their actual decision to actually go in and buy property. Moving on to analytics by city. With respect to Delhi, 34% of respondents are from South Delhi, and South Delhi witnessed a 13% drop in HSI this time. West Delhi comprises another 25% of respondents, and there was an increase of 6% in HSI here. 77% of those who were surveyed are end users, meaning to say they want to actually buy to live in the property they're investing in, whereas the rest of them are looking to enter as an investor. Now, flats are the most preferred property type, with 59% preferring flats, followed by single floor units in Delhi. 25% of those who already live in their house are looking to buy, which meaning that they probably are looking for a second or third property. And 55% of respondents currently live in rented accommodation. This again bodes very well for the property market, because the 55% is actually very keen to get out of the renting mode and actually own property. 21% live with parents or relatives. So there's a 44% drop in HSI for buyers working in the IT sector, which is actually a very sharp drop, but a very marginal increase of 2% for the self-employed, who comprise 18% of respondents in Delhi. So this is some of the analytics that we work on in the sense that we would just like to gauge what people in different sectors, working in different sectors, think about the markets. And sometimes we do get very interesting revelations in the sense that while some sectors are highly negative about property markets, there are some other sectors who are actually very bullish about markets. And this could be something that's happening to the industry as such. So when you notice a slowdown of the job cuts in the IT sector, for example, you're going to see a lot of negative sentiment there. Whereas those in the realty and other sectors who are actually unaffected by this will post a lot more, will post either positive or higher sentiment. Moving on to Noida. Both Greater Noida and new developing sectors, which make up over 90% of respondents, witnessed a 12% drop in HSI. The 30 to 39-year-olds comprise 55% of respondents. So this is followed by the 40 to 49-year-olds in terms of age bracket. And with respect to Noida, 40 to 49-year-olds witnessed a huge drop of 42% in HSI. 8% of respondents are female. Really, overall, nationally, I think the average comes out to somewhere between 9 to 10% of respondents being female. 65% cite financial reasons, while the rest of them cite market conditions for their property purchase, which meaning 65% think it is because of their own financial conditions that they are not able to go in for property purchase at this point, whereas the rest of them think it's the market conditions. They're either expecting prices to drop or the economy to improve. Buyers working in the IT sector, again 35% of them, then the government and the self-employed, all of them witness positive sentiment in Noida. Moving on to Gurgaon. Sonar Road, comprising 14% of respondents, witnessed a fall of 23% in HSI. Now, except for Old Gurgaon, which witnessed a marginal increase, all other areas witnessed a drop in HSI, and this was up to 24%. So Gurgaon did face a rough quarter in terms of sentiment. HSI of 139 for those who are planning to buy property as an investment is 49% more than those who plan to buy as a place of residence for their family. So meaning again that those who are planning to buy as an investment think of the economy and think of general conditions, property conditions around them as being a lot more positive. They perceive it to be a lot more positive than those who are buying for their own residence. 69% are end users, while the rest of them are looking to enter as investors. 69% prefer flats in Gurgaon, and followed by 14% who prefer villas. And 35% of those who already live in their own house are looking to buy, while 54% currently live in rented accommodation. Now this is again steady across the entire nation. Over 50% of them live in rented accommodation currently and are looking to buy. Moving on to Kolkata, 43% of respondents are from South Kolkata, while 37% are from North Kolkata. There's only 2% who responded from West Kolkata. 35% of buyers are looking at properties that are less than 20 to 40 lakhs, while 20% are looking to buy within the 40 to 60 lakh range. Properties below rupees 20 lakh comprise 35% of total respondents. This is the highest among surveyed cities that falls in this property range. So Kolkata is at one end of the spectrum in terms of the number of people who are looking to buy property below 20 lakhs, and Gurgaon is at the other end with maximum number of people looking to buy property over a crore. 15% of respondents belong to the IT sector, while 19% are self-employed. 38% want to purchase property within the next 6 months, whereas 37% are ready to wait a year or more. This is kind of the brief snapshot of the kind of analytics we work on. And apart from this, what we are doing now, since we have about 6 quarters of data with us, we are comparing the HSI itself with other housing indexes like the RBI's HPI, the Residex, National Housing Board's Residex Index, and seeing how our sentiment index compares with these other indexes and also with the top index. And it does look, at least early indications do indicate that the housing sentiment index is actually working out as a good lead indicator in terms of being a, kind of indicating where property prices are going. Are they going to go up or down? In terms of the sampling technique itself, this is a quarterly online survey conducted by MagicBricks across 10 cities. And a standard questionnaire is mailed out electronically to select members, and once they fill in the survey questions, the IIMB team puts all of the data together, crunches the numbers, and comes out with these analytics. And the price expectations are for the next coming 6 months. So moving on to the last slide, this is just a comparison of the HSI across the 4 cities that we talked about. You can see that all cities HSI has dipped, although the sentiment still remains positive and above 100. And this is the status across the entire nation. So over to you, Aradhana.
Thank you, Uma, for sharing this informative presentation with us. I would request Jayashree to take up the questions now.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. We have a query here from Shailendra Pal, who says, isn't the NCR market witnessing oversupply situation? If yes, do you think developers will reduce price to offload stock? Shailendra, I have not seen developers actually drop prices. The prices haven't gone up for a period of time. That in itself means that, the inflation is going up, but the prices are not. Therefore, the inflation index prices have not gone up. However, there is another aspect to this. When developers find that the consumers are not really buying, what happens is that they may not drop listed prices. But there's a lot of negotiation that can happen. And you should be able to figure out if you're looking for property in a place where the supply is higher or the demand is higher. While we are giving you strength at the city level or maybe at macro locality levels, please do check out whether the place where you want to buy properties is oversupplied or undersupplied. A city is not equally oversupplied or equally undersupplied. What really happens is that if you are are buying in a place where there's more stock and less demand, you can aggressively negotiate. If you are in a place where there is less stock, stock comes just once in a while, and the demand is quite substantial, then you may not be able to negotiate as much. To this extent, this applies. Your question applies, but I don't think you will be able to actually say that developers see that there's too much stock, so they drop prices. That's not happened so far. Let's take a query by Sona Patnaik, who says, which part of Delhi is best for investment, northeast, southwest or southeast? Now look at it like this. Places where values have already gone up will not give you very high returns in the future. But in places where there is fresh stock coming in, that is where there will be future investment potential. The Delhi market is primarily down because it used to be an investor-driven market, and investors used to actually fund the markets in Delhi. Today what's happening is that you do know that because of the land pooling, there is going to be a large tract of land which will be opened up for development, and policies are yet to play out. So a lot of investors are waiting and watching. Also, after the DDA auctions, once the results are out, that will also bring a substantial amount of stock into the market if the DDA gives hands over on time. That will also ensure that all the investors are not too sure which way the markets are going. A third factor is, like Uma mentioned, the circle rates have been increased substantially. In some areas, the circle rates have actually gone above the market rates. Therefore, all these factors combined have lowered the prices in the Delhi market. Now, if you want to invest in Delhi, if you buy into a property that is, say, check out on Magic Bricks, we give you quarterly changes in prices at the locality level. Check out how the localities are doing. There are newer areas such as Bahadurgarh and so on, where the metro is now going to enter. Relatively unexplored markets where the metro will give a boost. And you can also see that there is some amount of housing stock. Some large developers have started selling there. If you want to enter as an investor, I would suggest go into these peripheral markets and buy. Don't buy in markets where the infrastructure is not there. For instance, there may be a lot of development that may be happening in, say, places like Narela and Bhawana. Once the metro connectivity is announced, these markets are likely to get a boost, but otherwise not. There are some areas like Janakpuri, Vikaspuri and all where there is a lot of redevelopment required because these are aging localities. So you have to keep all this in mind when you're looking at returns from the real estate market. Okay, I have Manoj Pawar saying, should I buy now in Delhi or wait for another 6 months, taking into consideration that fresh polls in the city will be, there will be fresh polls in the city by Feb 2015. During an election time, you find that consumers always go into the wait and watch mode, because after the new government comes, there will be some policy initiatives. Policy initiatives help give direction to the real estate of the city. Uma, please feel free to jump in at any point when you have some responses to give.
Sure, Jay, I'll do that.
Okay. There is Jimmy Mohikar who says, please tell me whether to invest in independent houses in Noida or a luxury flat in some project along the expressway, which will give me better appreciation. Right now, Jimmy, there is the Noida market does not allow you to buy a plotted development and redevelop it into single floors. The Gurgaon market and the Delhi markets, this is allowed, and that is why you've seen plotted developments in demand in Gurgaon as well as Delhi. In Noida, there's a very large stock of new apartments coming up along the expressway and the Noida extension area. As a result, you may not get very high returns yet for your plotted developments, which is why it is worth buying a luxury flat or some in some project along the expressway. Just a word of caution, there are many developers there. You must check the track record of the developer and do go and visit the area and ensure that the project is actually happening on time, or even if it is delayed, that work is taking place currently. I have a query from Jayanta Majumdar, who says, where to find a good 2 BHK residential apartment close to metro and IT space? Jayanta, you have not said which city. Unless you give me the city name, I will not be able to answer this. Please write again and give us which city you're looking at. I have Pinaki Ray, who's looking for a 3 BHK property in Newtown, Kolkata near Rabindra Tirtha. What budget should I look for? How much is it going to appreciate in the next 5 years? Pinaki, before I give you an answer to where you'll find your 3 BHK property, I would like to tell you that actually Kolkata is in a cusp right now. If Kolkata goes the boost investment and commercial development, then you will see a lot of development and return on investment. Currently, the Kolkata values are not very high, but if you buy at an early stage, you will get some amount of return. Now let me tell you where you can get. Currently, Newtown property rates are 4,400 to 5,600. There has been a 2% rise in values here in the quarter. What I would suggest is, Pinaki, come on to Magic Bricks, post your requirement in the box that you see there, type Kolkata, look for a property, and there are a large number of options that you have. Nobody can actually tell you which property you should buy. We've given you a lot of information on Magic Bricks, which will help you make a informed decision. Whatever you see on the site, ultimately before you put in your money, you must actually visit the site and see what's happening there. There is a query from Bhupendra Jain who says, do you think houses in Delhi within 5 kilometers of schools have a better chance? There is a rule in Delhi that students living within 5 kilometers of their schools have a better chance of admissions. Bhupendra, city's property market does not is not actually completely driven because there are schools in certain localities. That's a very small viewpoint. There are many factors that you have to consider when you look for a property. Will rental markets move in that direction? Rental markets is you stay on rent in areas where you find the conveniences. You buy where you can afford to buy, and properties match your budget. So if you're looking as a buyer, do you think the actual market, the property market will move because there are some schools in the vicinity? I don't think so. I think rental markets are more prone to these local vagaries, and during the admission cycle, yes, there will be a big, it's a factor that preys on people's minds. But remember that of the entire population, only a certain percentage have children who are seeking admission into schools at that point of time. So that's a small factor. Look at the larger picture. Property markets work in respect to the larger picture. There's Priyanka Sharma who says, which are the areas I should consider when if I plan to invest for rental returns? I'm an NRI, would prefer safe localities for sale. Priyanka, first of all, go with a good reputed developer. Since you are not in the city, it is important that you go with somebody whom you can trust. Now on Magic Bricks, if you go to the advice section, we tell you what are the property rates and what are the rental returns. If an area, and we also tell you how it has moved in the quarter. Do a lot of research here. We go to advice.magicbricks.com. If you have any queries, post your queries there, and I'll be only happy to get them answered for you. We either answer we have a large edit team which is constantly tracking property markets, which will be able to help you. Or if you require a developer or experts in the market to answer, we also facilitate that. We have legal experts, taxation experts, and other consultants who answer your queries regularly. So do your research, find the property, and then look for it. Normally, rental markets are buoyant in areas which are close to commercial districts where people would like to reduce their daily commute. So check out where the commercial markets are and then see what are the localities where you would like to invest. We've got Pinaki, who's come back saying how much properties in Noida extension are going to
person
appreciate
you
in
are
the next.
speaking with has put your call on hold. ನಿಮ್ಮೊಂದಿಗೆ ಮಾತನಾಡುತ್ತಿರುವ ವ್ಯಕ್ತಿ
Pinaki Ray has asked, how much have properties in the Noida extension, how are they going to appreciate in the next 2 to 3 years? Pinaki, this is a good question, and you must remember that there's going to be a large amount of stock that will enter this market. And it has already begun, and there will be a large amount of stock that will enter the market. So when you look at this area, you will find that there is a lot of property that end users can buy. Right now, the possessions have just begun, and end users are buying. As more and more properties come into the market, nobody will be able to predict how this market is going to behave. We do have the metro coming in, and the metro construction will take roughly about 3 to 5 years once the construction begins. So you can assume that in 5 years, this market will kind of even out, but how much it will rise, nobody can predict. I have Nalin Kanta Mohapatra who has asked, he wants to buy a plot in Bangalore in a budget of 10 lakhs for his own use. Can you suggest some hassle-free projects? I'm really sorry to say that I don't think within 10 lakhs you will be able to buy. I don't have many options for you in 10 lakhs in Bangalore. You will have to go further away from the city, and it will be mostly. I can tell you that you can get an apartment probably in this much area. There are some options along the Mysore Road, in Dodabalapur, Devanahalli, Begur Road, but I think these would be small plots, and these would be from local developers, small local developers. We don't think national developers are selling at this price range. Jayanta Majumdar has come back saying, I'm looking for somewhere in Delhi. My question was where to find a good 2 BHK residential apartment close to the metro and IT space. Now, Jayanta, are you buying a property? If you're looking to buy a property, there are a large number of localities, like we mentioned in the presentation. A 2 BHK property you can get along Chhatarpur, Ayanagar. There are some places in Malviya Nagar. You see, nobody can tell you where to buy. You go to the site and look for 2 BHK residential apartments in Delhi, and you will see a large number of options that come up. Now start knocking off the ones that you don't want. You'll be faced with a bank of properties from which you can choose depending on where you stay, where your friends and relatives are, what are the kind of, your preferences and priorities are very important. Once you do that, then you will be able to shortlist, and do come back and see and post your query on open house for us to answer. If you still have more queries, we'll be happy to answer your queries. There is Nripendra Malakar who says, can we say this is the right time to buy in Delhi, as once Metro Phase 3 gets operational, prices will go up? Absolutely, Nripendra. Prices will not hold for beyond 6 months. We have been saying this again and again. While certain properties, the prices may go, you can't see prices dropping anymore. So you have to keep looking, and if you find a property that is good for you, go for it, because these prices will not hold for very long. Because the Delhi elections have been announced, this process can stretch a little more, but personally I don't think that more than 6 months these prices are going to hold. Once prices go up, you will kick yourself for not buying at the right time. There is Pankaj Srivastava who says, where can I find 2 BHK units within 30 lakh in Delhi or Noida? Please guide me about ready properties only. Pankaj, in Delhi, within your budget, we see properties on Magic Bricks in Uttam Nagar, near Janakpuri, Ayanagar, Kanpur and Chhatarpur in South Delhi. These will be smaller developers. In Noida, you don't have any ready to move in units. Most of the units are under construction, and in your budget they are in sector 73, 110, 77 and sector 121. This is where I can see stock within your budget ranges in Noida. I hope that helps you. There is Suditya Khare who says, in Delhi, circle rates are more than market rate. Will this have any negative impact on property prices? You can already see, Suditya, that places such as New Friends Colony and Maharani Bagh are struggling with the fact that the circle rates are way above their current market rate. We have an instance of a seller who wanted to exit that property, but the circle rates are higher than market rates, and buyers don't want to take that risk because there are tax implications here. The RWAs have already made representations to the Delhi government, and once there is a good government in place, you can expect some kind of correction. But otherwise, yes, certainly higher circle rates have an impact on the real estate markets and the property prices.
Actually, if I may quickly add here, we are actually doing a lot of research in this area in terms of the effects of circle rate on property prices. In general, the perception is that when you increase circle rates, the government is actually helping to inflate property prices. And again, there needs to be a scientific way of coming up with these circle rates. So I'm pretty sure we'll be sharing some very good articles on this written by our professor, Dr. Venkatesh.
Very shortly. It will be published very shortly, and we'll let our users know when it is on the website. And Uma, that is a very correct statement. You know, when circle rates are done in an unscientific fashion, then what happens is that nobody really knows that they are actually tinkering with the real estate markets in the city and creating large problems for end users. So will property prices crash because circle rates have gone up? No, the transactions will stop. Don't think that high circle rates are good for buyers. It is not, because it really is a mismatch between what the actual ground reality is and what the government perceives as the ground reality. And therefore, it is very important that it gets corrected. Uma and Professor Venkatesh are doing some really good work on that, and we would shortly get back to you with lots more about circle rates. There is a query I've got from Trilok Pathak, who says, how different is the Gurgaon market when compared to the Delhi market? I've heard that developers cannot build flats less than 1,200 square feet. How does the buyer profile vary here? These are two different questions actually, Trilok. Let me tell you what is the difference between the Delhi market and the Gurgaon market. The Gurgaon is a much newer market. It has not grown organically. It actually grew on the back of very, very good quality commercial real estate. It developed only from the early 1990s or mid 1990s actually, and therefore it's a very new city. The premium real estate, commercial real estate that came up here actually triggered a lifestyle which matched what the commercial the professionals working in these commercial establishments could occupy. So you have good quality development, but the infrastructure did not match that because the government services were very weak. So in terms of infrastructure and roads, water, power and all that, Gurgaon had remained weak for a long time. These are now being addressed. Some of them have been addressed, but the quality of gentry between Delhi and Gurgaon is very different because Delhi also has a very large trading community which is not present currently in that scale in Gurgaon. Gurgaon is largely driven by professionals and the lifestyle matches that of the professionals. Now let me come to the second part of your question where you say that the developers cannot come up with flats of less than 1200. Yes, that's true because the density norms in Delhi and Gurgaon are different. In Gurgaon, you cannot build smaller units because the density norms require you to have a certain density per square meter, and that does not allow for smaller developments in Gurgaon, which is why you have large format apartments. Nalin Kanta has come back again saying, Chitkati Rupapati in Bangalore, 10 lakh plots are available. Can you suggest the future prospect of this area? I'm afraid I wouldn't know much about this, Nalin Kanta. What I can do is let me find out and I'll get back to you on this. We will write back to you and we'll also post it on Open House. Do keep track of that. Promita Bose says, where to look for properties within 40 lakh in Kolkata? Within in the 20 to 40 lakh range, we can see properties on Magic Bricks in Rajarhat, Garia, Bihala, Baguiti, Nayabad and Keshtopur. You can check out Magic Bricks, you will find properties. Let me tell users, the larger body of users here, why I can tell you broadly where the properties are. Actually, it makes sense to go to the website magicbricks.com. There is a box that appears, put in your requirements and see what properties are available. Then when you want to, like Nalin Kanta came back with a property, with a locality, I'm afraid I'm not familiar with that, but we'll definitely do some research and get back to him on that. Like that, if you have specific queries on how do I choose a locality, how do I choose a developer, where should I look because I'm staying in this particular area. These are all the concerns that you should be raising because whether you should find you should look for a certain buy in a certain locality, I'm not sure that anybody can tell you. That depends on where you work, where your children study, whether it's close to transport corridors, how far you have to travel. It depends basically on your lifestyle. But we can actually help you and guide you in how to make sure that you're buying the right property. We've got Geet Neela asking, is it safe to invest in a Kolkata luxury property? Of course, it is safe if you're buying from a good developer. When you buy from a developer, keep these few thumb rules in mind. Check out whether that developer has a track record. Go and check out with people who are already staying in development. Check out the developments that they have previously launched. If the developer does not have a track record, go back to the developer, demand that you see all the property papers are in order. As a buyer, you have every right to assess whether the titles are clean, whether the approvals are in place, what is the schedule, is it a funded project. All these should impact your property buying decision. And luxury property can be defined in many ways. Luxury would be, if it is for some people, just large format, size is a critical factor. For some people, it can be the smallest unit, but it has to be, the specifications have to be very, very high. You should have good Italian marble. You should have certain quality of, inputs into the house. So ensure that you know what you are paying for, and whatever is promised to you, that should be given to you. I am taking the last question of this evening. Where to invest in a pre-launch project or ready to move in? Ravi Salan has said. Ravi, I never ever tell users to invest in pre-launch properties. Yes, they come at attractive prices, but remember that this is pre-launch because the developer has not got the approvals. Now, I'll give you an example of what happened along the Dwarka Expressway very recently, where a developer, a well-known developer, who had already launched 2 towers, was launching a 3rd tower there, but had pre-launched the tower. The approvals did not come through, and all the users who had invested there had to run from pillar to post to ensure that their property gets transferred to the relevant towers and all that. It is not a nice feeling to know that you have actually invested in something thinking you'll take a corner plot and then be stuck with maybe a floor that you don't want, or it's facing a direction that you don't want. So I would always say, please wait for launches. Yes, you have to pay a little bit extra, but remember, it's your money and you have to safeguard your own money. I'm afraid we've run out of time here. There are some more queries here. We promise that we will put these queries into open house and will get them answered. So please keep watching openhouse.magicbricks.com for all the answers. Thank you so much for joining us. Thanks, Uma. Over to you, Aradhana.
And I'm really thankful to our guest speakers today for conducting this informative webinar with us. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you all for joining us today. Thank you, Jayashree. Thank you, Uma, for taking the time out and having us. I hope you both have a great evening ahead.
Thank you, Aradhana. Goodbye, everybody.
Bye-bye.